Wednesday night, as President Trump rolled out his meat axe tariffs, the luxury home goods retailer RH was holding his conference call after reporting a little bit weaker than expected quarter. Stock was rolling over, but once these not-so-reciprocal tariffs were announced, the darn thing got crushed because most of their manufacturing is overseas, especially in countries that now have shockingly high tariffs, like think Vietnam, China, Indonesia, India, even Europe. It was so ugly that the CEO made, well, let's say he spoke freely. In the end, RH plummeted 40% yesterday, plus a bit more today. Now the stock's down roughly 63% year to date. So what happens next? RH is trading like this is an existential crisis for their business. Is that really a concern? It's a great growth company. Or are people simply panicking? Let's talk it over with Gary Friedman. He's the chairman and CEO of RH, who should be commended for coming on and talking with us during a very tough time for his company and many others in his industry. Although I think he's really in an industry of one, and he is in the arena right now. Mr. Friedman, welcome back to Mad Money.
Thanks, Jim.
All right, so Gary, I obviously want to start with take us through Wednesday night and what happened, because it was obviously very different than a typical earnings report that you've given, and it was happening in real time. I'd just like to know what you were thinking.
Well, you had to be able to think on the spot, right? I think the tariffs that were announced, while somewhat anticipated, were somewhat shocking at the levels that they were communicated. And what we tried to do, at least what I tried to do, is address the situation as we saw it. And look, if you just motor up and say, our company's been operating with 25% tariffs out of China since the last Trump administration. So tariffs are not a new thing. And we've successfully resourced the majority of China sourcing to Vietnam at significantly better than pre-tariff landed cost pricing. So we feel like we're in pretty good shape. And additionally, we communicated that we've resourced a meaningful amount of China production to our own factory in North Carolina. So, start up there. That's number one. Number two, we communicated, and I tried to be direct and honest with our point of view on this, is that, we believe that President Trump is using these significant tariffs to really as a negotiating tool to accelerate the negotiations with the intent to improve balanced trade conditions around the world. I think that's the intent of the administration. And quite frankly, I can't really criticize them for that. We're kind of happy it's not death by 1,000 cuts, that, we're not starting with 10% or 20% tariffs and, 3 or 4 months negotiation goes by, it gets raised again, right. Gets raised again. It becomes an elongated situation. In fact, if you think what's already happened, I don't know if you're aware, if you saw President Trump's tweet on Truth Social today.
Sure.
But he just said he had a very productive call with To Lam, the General Secretary of the Communist Party of Vietnam, who told the president that Vietnam wants to cut their tariff to zero and believe they can make an agreement to do that. Now, do we believe tariffs will go to zero? They may not. But they may not be 46%.
But Gary, I've worked with you since 2018. You have diligently moved. You were 46% China, then 41% China, then 38, then 35, then 34, then 29, then 22, all the way building up with Vietnam. And I was so proud of you. You listened to what the president wanted, and you understood that Vietnam was a better place in terms of being a better friend. You did everything you're supposed to do, and then the tariff is like monstrously high on Vietnam.
It is, but you've got to, even if it's at 46, you got to keep it in perspective, okay? We resourced product to Vietnam at a better than China pre-tariff pricing.
Okay.
So even if you put 46% on top of it, is it more difficult than 25 out of China? It is, but you're starting at a better price. At a better place, right? So, net to us, it looks like it's about another 20% increase. which is manageable, which can be absorbed through, some negotiations with our manufacturing partners, with some, higher pricing to the consumer, and somewhat minimal impact to our margin structure. Because remember, we sell relatively high price goods compared to anybody else in the market. So you've got, with furniture, you have a big landing factor on the goods because you have a big freight cost getting product to America. So at higher prices, even if they are tariffed, you've got leverage on the freight cost. So freight cost as a percentage goes down, supply chain cost as a percentage goes down. And I think what the market doesn't understand with tariffs is what does it look like through the entire economic model of a company like ours?
Okay.
We've been able to negotiate, to navigate the last tariffs. We can navigate these tariffs even if they're 46%. Is it more difficult? It's more difficult. Is it going to change the outcome of the company? We don't believe so.
But at the same time,
but we also don't believe. We don't believe they're going to be 46%.
True. I know, and I sure hope they're not. But at the same time, you did talk a lot during the call about the repurchasing you did, about what it did to the debt load and what it did to your cash position. I've seen you come through everything. In 2008, I saw everybody else get crushed. You came out and you were stronger. Can it be like that again, or are you playing it a little bit closer than you like, given your negative free cash flow?
Yeah, we're perfectly comfortable. Look, Jim, I'm the biggest shareholder, single biggest shareholder in the company, and have 99% of my net worth in RH. So I'm not going to put my own net worth at great risk. Do we have meaningful debt? I addressed that on the call. Yes, we do, and it's in my letter. Do we also have, tremendous business momentum right now? Yes, we're just up 18% on the 13 versus 13-week basis in the fourth quarter. We're 15 to 25 points ahead of anybody else in our industry. So we have tremendous business momentum, and we have significant assets. Okay, we own roughly, estimated $500 million in real estate assets that we can monetize as market conditions warrant when we want to. We also have brought in incremental inventory basically to de-risk our merchandising transformation and de-risk the potential for tariffs. So we've got, call it $200 to $300 million at cost of additional inventory we're carrying today. Now, that's not just you got to think about cost it's at retail. You're talking about $600 to $900 million that we can turn into cash, and we have less risk in a tariff transition, I believe, than any other retail company of our kind on the planet today. Some people think that extra inventory means we have more risk. It's exactly the opposite. We've already paid for that inventory. That inventory can be turned into cash, and it also de-risks. It puts us in a position to not have to order immediately while tariffs might be 46% or whatever country we're coming out of. It allows us to say, hey, we've got enough inventory to kind of play this game the way we want to play this game.
But I
don't believe anybody else does.
I know, but you taught me also that the stock market matters. That if the stock market gets killed, there'll be some wealthy people who will pull back. Well, we got killed.
They might pull back, Jim, but they also might run to buy furniture if they believe it's going to be more expensive. Okay,
That's
so
true.
I would tell you that the last couple of days looks like people are probably running to buy furniture, running to buy cars, and so on and so forth. So it's going to move around a lot. I'd say today we're very comfortable with where we are. We just, in fact, at this moment, I believe we're putting out a press release to kind of give an update on the reciprocal tariffs and our view to kind of reinforce some of the things and add more color. But, our business to date this quarter, in the RH brand is up 20%. Our whole competitive field is guiding +2, -2, up 5. So, think about a company of our size, with demand running up 20%. Now,
what is your release? I mean, we're not missing anything for your release. I mean, you're not burying it. There's not some big story in the release that's going to come out. And I'm going to say, why didn't I ask Gary about that? I thought he liked me.
Well, I'm telling you about it right now. I didn't want to take any risk. I'm only telling you. But look, because we went on moments after the Trump tariffs came on, we're kind of the poster child for tariffs at this moment.
Yes.
And because we have cleaner disclosures, I believe, than anybody else in the country. We disclose exactly where we're sourcing from, where many people are much more opaque, saying, "Oh, we're sourcing the highest percentages this country or all of Asia." We're very transparent, and so I think our transparency is hurting us a bit. Other people that are more opaque maybe aren't getting hurt as much. People can see we have a meaningful amount of debt based on the fact we bought back $2.2 billion of our stock. That's understand some of the noise.
Okay.
But the key thing is don't let the noise dilute the truth and the true signal here.
But
this is a company that is growing massively faster than anybody else, that is well positioned to move through this tariff situation, however it plays out. And some of the debt we have is because we bought $200 to $300 million more inventory in anticipation of this. So, look, I think I decided to come on today because I thought, look, somebody's got to go out there and fight for our shareholders because the press isn't always so kind if you're the first person out talking about it. In a conference call like we did. So, I'm just trying to be clear to everybody.
Well, you got rates going your way. Interest rates are coming down, right? You didn't even mention interest rates are coming down, which is something. Now, your people are richer than worrying about a 6% versus 7%. But that goes your way in terms of the possibility of the worst housing market in 50 years. Maybe we're going to catch a break with mortgages and we get some transactions. Maybe that happens.
That might happen. But honestly, we're somewhat indifferent. We're outperforming everybody in the worst housing market by a meaningful amount. So I just say, just however the cards play out, I'd say bet against us at your own risk.
But I would like to see. I don't want to bet against President Trump.
Fine.
Maybe President Trump listens to the interview and realizes maybe I should do something this weekend.
Yeah. Well, look, I think like I said, I actually think, the whole world's a little shaky about this. We haven't had a leader who's ever moved at this speed with this clarity and who has negotiated at this level. I tell people, this is, somewhat like the negotiations during the Cuban Missile Crisis. This is kind of President Kennedy, communicating directly to Khrushchev, but we've got a president that's communicating to the whole world, right? And he's got leverage, and he's using leverage. And at the end of the day, it's all going to be really good for a country that has a broken balance sheet, and needs to balance budgets, needs to fix our balance sheet. I think our economy could come out booming post this period. So the key is to be able to navigate through this.
Well, look, you're a gent to come on. You've been the best. You've been with me the whole way since the show started. And yes, I am pulling and rooting for you, but maybe I don't have to because the numbers are good. Thank you, Gary Friedman, who's the chairman and CEO of RH. It's great to see you.
Great. Thank you, Jim.
And Khrushchev did blink, didn't he, in the end? He blinked big.
He did blink.
That was the high water mark of that whole darn operation. Everybody's back after the break.